vibration that lets success soar high. I will achieve, I will fly high. In SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking sector. It is 2nd of November and I am Ruchika Chitravanshi. Today we have a special episode for you. This week, Business Standard hosted the 4th edition of India's biggest BFSI event, the Business Standard BFSI Insight Summit. And in this episode, we bring you the best from the summit. The RBI Governor spoke to Business Standard in a candid fireside chat at the summit, and our cover story this week brings you a glimpse of what Governor Das said. For Banker's View, we bring you a chat with Sameer Nigam, founder and Chief Executive Officer of PhonePe. In Banking for You, we will explain what higher for longer is, and to give us a roundup of all the major happenings at the BFSI Summit, Tamal Bandhopadhyay will join us for the Expert Take segment. At the end of the show, we will share with you the results of last week's poll and the question for this week. The two-day Business Standard BFSI Insight Summit concluded on October 31st in Mumbai. This was the 4th edition of the summit since Business Standard brought its individual BFSI domain events, which it had been conducting for over 20 years under one umbrella. The country's biggest BFSI summit featured some of the most prominent voices in India's economic, financial and corporate landscape, including Reserve Bank of India Governor Shaktikanta Das. On day 2 of the summit, Business Standard's Tamal Bandhopadhyay sat down with Governor Das for a fireside chat. Here are the key highlights from that discussion.
Reserve Bank of India Governor Shaktikanta Das said on October 31 that, in all probability, India's second quarter gross domestic product growth figure would surprise everyone on the upside. Das made this statement during a fireside chat with Tamal Bandhopadhyay at the Business Standard BFSI Insight Summit 2023.
Looking at the momentum of economic activity, looking at a few early data points which have come in, a few early indicators, I can say that the second quarter GDP number, as and when it is released at the end of November, in all probability will surprise everyone on the upside.
Governor Das also said that the biggest challenge to the global economy was the evolving geopolitical situation and its fallout on the financial markets and global growth. He added that the new flashpoints developing and new geopolitical conflict points evolving posed the biggest risk for growth, not just for India, but for the world as a whole. However, the governor assured that India was better placed than other countries to deal with such risky situations. On India's inclusion in the JP Morgan Bond Index, Das said that while it was a vote of confidence in India's economy and financial markets, it was also a double-edged sword. He explained that while the inclusion would lead to inflows, there could be an outflow of passive funds when the weightage goes down. However, he assured that the central bank was well equipped to deal with such outflows and inflows.
In the case of India, I would like to believe that given the overall macroeconomic stability and the financial sector stability that we have, even the passive investors, the world has changed. The passive investors are also looking at other aspects of an economy, the nuances of an economy, the strength, the strength and the underlying fundamentals of an economy. So therefore, I don't think we will see that kind of volatility. But should something like that happen, I think RBI has the capacity to deal with it and deal with it effectively.
Governor Das also said that RBI's supervision has been in line with the growing complexities in the sector globally, emphasizing that the Indian banking sector and non-banking financial companies were healthy and robust, Das said that the central bank was not looking at their business model from a micro perspective. Instead, he explained, the RBI was monitoring the structure of their balance sheets.
A problem which looks small in some corner of the balance sheet of any financial service provider, bank or non-bank finance company, a small risk which initially appears small in some corner of the balance sheet can become highly risky unless it has been properly understood, unless it has been properly mitigated. So our emphasis is more on that.
The governor highlighted that the RBI had adopted risk-based supervision, under which it was looking at the risks assumed by financial institutions and whether they had been properly addressed. He also said that after the fallout from the failure of some banks in the US, regulators have woken up to the fact that much more intensive supervision was required. On the topic of cryptocurrency, Governor Das reiterated his stand that it was a serious threat to financial stability, especially for emerging market economies. He added that that risk had to be looked at and managed very seriously.
The IMF FSB synthesis paper also says very clearly that based on country-specific requirements, especially emerging market and developing economies may, depending on country-specific situations, may impose additional restrictions with regard to cryptocurrencies. So the problem, the risks are well recognized by the IMF FSB synthesis paper. It has been very well recognized by the BIS paper on cryptocurrencies. Everybody understands and agrees that there are serious risks.
Coming to the internationalization of the rupee, the governor said that it was not a target but a process. He explained that the RBI was looking at the internationalization of the rupee because dependence on one currency for international trade had its risks. However, he made it clear that this was not about pitting the rupee against the dollar. Instead, he said, the RBI was looking to increase the footprint of the rupee in international trade, especially with countries that have a high trade volume with India. Governor Das's answers brought clarity on many fronts, from why and how the RBI is scrutinizing the business model of banks, to how it will deal with the challenges posed by geopolitical risks and crypto assets going forward. Ultimately, given that we are in the midst of the World Cup, Governor Das drew on his love for cricket to end the interaction with some advice for the larger financial sector.
Since we are in a World Cup season, let me just say the message is to all financial sector players and stakeholders, please play long term, play like Rahul Dravid.
Well, if the RBI is the coach like Rahul Dravid is, right now PhonePe would be a champion player in the team perhaps. And in Banker's View, we have with us Sameer Nigam, the founder and CEO of PhonePe. One of the reasons for PhonePe's success has been its early mover advantage in the UPI platform. Nigam tells us what has worked for his company and the road ahead. Here's the chat.
The person I am having right now with me, Mr. Sameer Nigam of PhonePe, is actually the Maruti of India's digital transaction. You know, it's Maruti's market share is right now 42 or 43%, but Mr. Nigam's PhonePe is now close to 50% of India's digital transaction that take place in this country. There's this view in some segments that because the banks did not show much interest in this area of digital transaction, digital payment ecosystem, players like you, Google Pay, Paytm have gone and acquired 94% of the market share. How true is that assertion?
There's definitely some truth to it. Initially, when I started talking to them, I used to get very confused Because when I deposited money, that's my asset. They used to keep talking about liabilities and they talked about loans as assets. So it took me, as a 20-some-year-old, I just couldn't figure out why they were calling assets liabilities. I thought they had it wrong. Then I realized in their world, they make money by lending. And what I give to them is their liability. But there's a natural business model in there. They take on the cheap and they lend on the high.
Yeah.
Now, if that's where you're making 90-some% of your money and the rest is on account opening, why do you care about this thing called digital payments? That's just distribution or dispensation. I don't know a banker who was super excited about operating ATMs once they became interoperable. Why would anybody be excited about digital payments? So I think in part, like a UPI model itself is all about the experience layer and building very, very robust, scalable tech. That's not what a banker's core purpose for or reason for existence is.
If one fine morning, if banks become savvy, they come in, how seriously will you be challenged?
Every time I hear a fintech who's saying, I want to become a lender and I want to become a bank, I laugh. It's the benefit of having similar hairstyles. You've seen enough to know you're not going to become a bank overnight because your mood said you want to become a bank. It takes a ton of work and discipline and governance and skill and all sorts of other stuff. So I think respecting boundaries, I think, in the same way, I think 25 years working as a computer scientist and usability expert, I think I can defend turf when it comes to the application layer. The day people here start saying that their banking app services them better than a PhonePe or a GPay or a Paytm or what have you, it's over. I mean, food apps, I'm sure restaurants can make really good food. Swiggy and Zomato don't own the market because they have the best food kitchen. They've tried. Restaurants have their own apps. They haven't won the market that way. I think these are completely unrelated items. I think a lot of hullabaloo is made around it because people assume payments is the natural birthright of a bank.
If you were to sit back and see where you went right and you acquired this 50% market share and where some of your rivals did not get it right, and you wear that thinking hat, and how would you analyze the difference between success and failure?
I think we did two things right and we got lucky on a third.
Yeah.
We got lucky because we bet on UPI before everyone jumped on the bandwagon, and therefore we got that all the wallet players who are now also trying to become UPI players, including Paytm, MobiKwik, Freecharge, they were already on IPL, they were really popular. I think they were so deeply sort of rooted in this value proposition that a wallet is better than the bank. It was hard for them to do a brand pivot. It was actually just a marketing problem. The tech of UPI wasn't harder. And so they were saying wallet is still better. The banks were not interested. The banking app was better. So we were the only ones who were screaming from a rooftop saying UPI is better. It was actually quite just, again, it's just luck. But we exploited that and we marketed very aggressively. By the time Google, WhatsApp came in, Amazon came in at the same time on UPI, a lot of other players came in. I think my response to this was, we will win because we are willing to deploy human beings on the merchant acceptance and operating side, which I don't think a WhatsApp, just DNA-wise, you can't get to 2 billion people on chat clients and social media and then have an operating leg of any kind. It's impossible. But similarly, you can't be in a space as sensitive as payments. Payments is not the same as sending a chat message or an Insta post. If the post doesn't refresh, you'll be bummed, but you'll go to sleep. Money is critical. It evokes the most amount of anxiety in life outside of health. I think the second one was wiring. I think we are a lot more comfortable being regulated. We actually welcome regulation. Big tech, well-established big tech, that is getting into financial services has always resisted regulation because they've never been regulated.
The NPCI had put out a paper which suggested that maybe by end 2024, the market share for the digital payments player would be capped at 30%. And you are already a giant with 50% market share. When that thing comes around, gets enforced eventually, how are you planning to deal with this big regulatory challenge which will cap your growth and market share?
I think the regulator has a view, NPC has a view, we have a view, government has a view, Competition Commission I'm sure someday will. I've only asked 2 questions till now. We've not got an answer. One is, tell me what you expect me to do to reduce my market share. There's 115 other TPAPs. Somebody else has to outspend, outwork, outhustle, and pick up their market share. That burden can't fall on me. Second, I think we are all celebrating UPI's success. But if there are another 600 million people left, are you telling me that as market leader, you want me to start telling them, don't use my app because it's the most popular, please go to the next person? That burden can't fall on me anyway. So it's not a regulation, by the way, it's a circular. Again, I'm clarifying this. I don't expect any passes on systemic risk as a large player. I don't expect any pass on good governance or good sort of behavior, not being monopolistic or any of those words. That's fine.
The second point that you were making, or have you made that second point?
I think the second one is that I checked myself because I just realized I'm here live. I think there is a market share discussion to be had once you've actually penetrated deep enough. When the MDR in a particular industry is 0, when there is no natural business model, you will see a contraction of investment by stakeholders. So while there are 150 people, guess who's not advertising for the last 2 or 3 IPLs? We are not because of cap, but nobody else is. Why? You'll invest in a sector if you can make money.
Okay.
And that burden again is not on me. I didn't make MDR 0. So you can't say there's no money and then tell the people who are still investing in laying the railroad, don't invest. I'm taking a 10-year view. Either others take a 10-year view or you make it attractive in the short run.
Thank you once again, Mr. Nigam, for being so frank. Thank you. Thank you.
Across the world, central banks have been increasing interest rates as a measure to control inflation. Fight against inflation, however, continues. In this context, our Banking for You segment this week will tell you all about the term higher for longer.
In the recent past, major central banks around the world have been on the news for implementing aggressive monetary policy tightening measures. They adopted the higher for longer strategy, a policy that involves maintaining elevated interest rates over an extended period to tackle specific economic challenges like combating inflation or stabilizing currencies. For instance, the European Central Bank applied brakes to its 15-month rate hiking spree on 26 October and kept its policy rate at a record high of 4%. The central bank said it would continue to watch out for incoming data as it is yet to achieve its 2% inflation target. Similarly, the Bank of England is expected to keep its interest rate steady at 5.25% on 2nd November, according to a Reuters poll. Some economists also bet on another rate hike. That's because despite a cumulative rate hike of 515 basis points since December 2021, inflation is still more than 3 times the Bank of England's 2% target. Retail inflation in England stood at 6.7% in September. In a higher for longer interest rate environment, the US Federal Reserve kept its interest rate on hold in its September meeting at 5.25 to 5.50%. Fed Chairman Jerome Powell indicated the possibility of further rate hikes if the economy stays strong and the job market remains tight. The Reserve Bank of India too held the repo rate steady in the past 4 consecutive Monetary Policy Committee meetings at 6.5%. The repo rate is the rate at which the RBI lends to other banks. Higher for longer interest rates can have unintended negative consequences on the economy. High interest rates drive down consumer demand as borrowing becomes expensive. Therefore, people have less income to spend. Lower demand affects production, which in turn leads to lower industrial output. Eventually, lower industrial performance forces companies to lay off employees, leading to a rise in unemployment. The ongoing macroeconomic uncertainties, exacerbated by geopolitical tensions around the world, have compelled major central banks to prioritize lowering inflation over achieving healthy economic growth.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
RBI Governor Shaktikanta Das too has said that inflation remains a priority over growth. How long the strategy of higher for longer lasts remains to be seen. Moving on, our expert take today will take us through the important highlights of the Business Standards BFSI Summit. I spoke with our consulting editor Tamal Bandhopadhyay to give us a roundup of the event. Hi Tamal, welcome to the Business Standard Banking Show. This is a BFSI Insight Summit special episode, which you took part in as well earlier this week. So first of all, I want to ask you, the main attraction obviously once again was the chat you had with RBI Governor Shaktikanta Das, and he has been very candid in talking about macroeconomic issues. And I wanted to get your view on one of the very important points he made, that inflation will be priority over growth. What is the governor hinting at?
No, I think that's a stated stance. It's not new. In fact, he repeated it twice or thrice, I think. So in order of priority, inflation, managing inflation, and then come. So now you see this is a classic dilemma before every RBI governor. What's come first? But essentially the approach which the Reserve Bank of India governor had traditionally been taken is this: if you have a sustained low inflation, that will ensure growth. So, and if you chase growth by itself, then you get into the trap of inflation going up. So I think this is been re-emphasized, not explaining in this way, but this is what governor meant is this: we need to have inflation at a lower level, and that at a sustainable, or what you call it, the durable low inflation for a longer time. Which is why even a year back, many of the analysts and all, they're thinking in terms of had India shifted its inflation targeting to 6%, which is the upper band. Now, governor has reminded us, and repeatedly reminding us actually, is that no, it's not 6, it's 4%, because its actual inflation target is 4% plus minus 2 percentage point on both sides. But he is insisting on 4%. And so that's very clear. Inflation is the top priority. And as I said, always the underlying meaning is this: if we can contain inflation, and if we can have low inflation, in India's case 4%, on a sustainable basis, then growth automatically comes. So
in fact, he said that the Q2 GDP numbers are likely to surprise us on the upside. Tamal, one of the other points I wanted to talk about was the crypto issue. There is so much interest in this crypto assets issue, and it was raised. So it was one of the big agenda items of our G20 summit as well. And he has sort of said it is dealing with crypto and regulating crypto is different. He said, we don't know what crypto is. We don't know how to define it. So what do you think is going to happen with crypto assets? I mean, his position has been very clear, but how do you read his statement?
It's again a stated statement, and he is insisting on the same thing that, look, I mean, he did not say it, but I'm just saying crypto over my dead body. That's kind of thing. If you see that at one point of time, there's the finance ministry where they're discussing, there's some law outcome. Before that, there's a committee set up to look into crypto. That committee report has not been made public even as we speak. But RBI governor, and this is incidentally at one of the BFSI summit that's on wave during the COVID time in 2021, governor for the first time emphatically had said no to crypto. And since then, there is no change whatsoever. So the what he is explaining is this: what is crypto? He doesn't know. Is it an asset? What kind of asset is this? Is it a currency? I mean, how can you have a parallel currency which will run along with the fiat currency, which is our currency issued by Reserve Bank of India?
This statement assumes significance, Tamal, because of the IMF FSB paper, which the G20 leadership has endorsed, which is saying that you cannot ban this. It's not possible to ban. You have to have some regulation in place.
Which is what the governor used the word dealing. He said, I mean, it's not, why not going to regulate it, we will deal with it. So
semantics. What do you mean?
The meaning is probably, no, we'll not let it happen. We'll deal with it. Eventually, and he said also the IMF paper does not talk about that you have to make it legal, etc. So we need to see and we need to deal. So we will have a kind of regulation. We'll make it impossible to have legally, indulging with the or managing crypto assets. So it's as good as that. RBI firm no to crypto, and rightly so, because it's neither an asset nor a currency.
Now, another important interaction was with Mr. Kamath, former ICICI Bank. Now, he has said that banks have never had it so good. But you have also stated some reservations in our previous interactions. One of the reservations, for instance, is the retail loans could be a cause of concern. So what is the catch there? Is it all that hunky-dory as Mr. Kamath has put it?
You see, Mr. Kamath insisted that. In fact, he has been saying that the banking sector has held the best in past 50 years. He is saying that banks are well capitalized, banks credit is growing, and also at the same time, banks bad assets are pretty low. Not historical low, but it's pretty low. So, and they have understood the problem, so they are very cautious. So every banker has said that. At the same time, yes, there are certain issues, I think, as far as retail and unsecured loans are concerned. None of them actually said that we are stressed or we are seeing fresh slippages, but they dropped hints. And Mr. Kamath also said that you need to be careful about this kind of assets creation, and the banks should be able to, have the right kind of risk management and underwriting capability, etc. Mr. Kamath also mentioned a very important point, which is not exactly new, but he has re-emphasized that, post-COVID, when there was a committee constituted by Reserve Bank of India to look into how much loans need to be restructured, and Mr. Kamath headed that committee. Now, the committee's assessment was as much as 9 lakh crore worth of assets probably would need restructuring. But actually, we ended up restructuring only 45,000 crore. So you can imagine that thing. So that's what he's saying, that it's a very pleasant surprise, and the banks are pretty healthy. We don't need to bother. This cycle will continue. And it was re-emphasized by both public and private sector banks. They do admit that, yes, there could be certain issues and all, but at the same time, they are saying that we are capable of managing the show.
Some very important statements being made at the BFSI Insight Summit, Tamal. And thank you so much for bringing us the, between the lines perspective to what all these important people have said. Always a pleasure to have you. Thank you so much for joining us. We'll see you next week.
Thank you, Ruchika. Thank you.
It is time now for our poll results. Here's what we asked you last week. Are you facing a shortage of the 100 rupees currency notes? 47.5% of our respondents said yes, they were, while 52.5% said they were not facing any shortage. Increased digitalization of transactions in the country post-demonetization could be one way out for those facing the currency shortage. The festival season is upon us, and with that, increased consumer spending. Our poll question, therefore, this week is, would you take a fresh consumer loan this festive season? Our poll is open from today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.